Imagine waking up on a normal morning in America. You check your phone, grab your wallet, and head out for coffee. At the counter, you reach for a dollar bill, and the cashier shakes their head. Cash is no longer accepted. Not just at this store. Anywhere. Overnight, the government has made physical cash illegal. No bills. No coins. Only digital money. For a moment, it sounds unreal. Extreme, but then a question settles in your mind. Could this actually happen? And if it did, what would life really look like? Banning cash wouldn't mean money disappears. It would mean money changes form completely. No more paper dollars in wallets. No loose change in pockets. Every transaction would happen digitally. Cards, apps, bank transfers, online systems. Whether you're buying groceries, tipping a waiter, paying rent, or giving money to a friend, everything would leave a digital trail. Money wouldn't be something you physically hold anymore. It would exist only as numbers on a screen, controlled by systems you don't see. So, why would America ever even consider something like this? The idea isn't as random as it sounds. Governments around the world have discussed reducing or eliminating cash for practical reasons. Cash is hard to track, which makes it useful for crime, tax evasion, and illegal transactions. Digital money, on the other hand, creates records. It's easier to tax, easier to monitor, and easier to manage at scale. From an efficiency standpoint, digital payments are faster, cheaper to process, and harder to counterfeit. From a policy perspective, cashless systems promise transparency and control. On paper, it looks clean and modern, but now imagine the first 24 hours after a cash ban actually goes into effect. ATMs instantly become useless. Machines that once handed out money are now just boxes with screens. Cash-only businesses panic. Food trucks, small convenience stores, flea markets, street vendors, and local shops scramble to adapt. Some simply close their doors. People are confused. Not everyone has the right apps set up. Tips become awkward. A bartender who relied on cash tips now watches customers hesitate, unsure how to pay extra. A babysitter finishes a shift and hears, "I'll transfer it later." For many, later doesn't come. The impact isn't equal across society. Some people adjust easily. Others struggle immediately. Office workers with bank accounts, smartphones, and steady internet barely notice after a few days. But elderly Americans who grew up using cash feel lost. Small business owners face new fees, new systems, and new risks. Immigrants who rely on cash for informal work find themselves cut off. Low-income families without stable banking access are hit hardest. Cash was simple. It didn't require approval, passwords, updates, or connectivity. Without it, participation in the economy suddenly requires permission and infrastructure. This is where the conversation shifts to the real issue beneath money itself: privacy. Cash is anonymous. When you pay with cash, no one records where you were, what you bought, or when you bought it. Digital money changes that. Every transaction is logged somewhere. That doesn't automatically mean abuse, but it does mean visibility. Banks can see patterns. Companies can analyze behavior. Governments can audit spending. Supporters argue this helps prevent fraud and crime. Critics argue it creates a system where financial behavior is constantly monitored. The truth sits somewhere in between. Digital systems bring convenience, but they also trade anonymity for access. Now, consider something most people don't think about until it happens. What if the systems fail? Power outages aren't hypothetical. Internet disruptions happen. Cyber attacks are real. In a cashless America, a widespread outage doesn't just slow payments. It freezes the economy. No cards, no apps, no transfers. A grocery store can't sell food. A gas station can't pump fuel. Even temporary failures create instant disruption. Cash used to be the backup plan. Without it, there is no fallback. Everything depends on networks staying online and secure. In this scenario, the government and banks wouldn't just stand still. The Federal Reserve would step in quickly. Emergency measures would be announced. Payment systems would be stabilized. Limits could be placed on transactions to prevent panic. Long-term, the focus would shift toward a fully regulated digital currency, often called a digital dollar. This wouldn't be cryptocurrency in the way people imagine it. It would be a government-backed digital version of cash, designed to work instantly, securely, and under regulation. The goal would be control, stability, and trust in the system.